It's Tuesday, the 2nd of October, and the S&P 500 finished with a small loss here, down 16 cents. It did close right at that 5-day moving average, but also below the 2-day or week-to-date VWAP. So for tomorrow, if we can get back above and hold above 292.5-ish, then I think that maybe this market can continue to make some upside. But it is getting tired in here. It's possible that we're entering a range-bound market, and there are reasons for concern, mainly from this Russell 2000. Russell 2000 got hit pretty hard again today, down $1.76, and as we know, it's been stuck below that declining 5-day moving average. Hindsight can tell us it would have been a great short, but this is not typically what happens when the primary trend is higher. I think it was in the weekend video I outlined the potential scenario of coming down to the volume weighted average price from the April low and undercutting this little low right in here from July, and that might be the potential place for a bounce to materialize. So it's possible that maybe tomorrow we undercut this low briefly and then rally up. But again, there's zero evidence that the buyers are in fact gaining control. We have a market that is, accelerating to the downside. A lot of times we do get a flush out, but those are more for, day trade type trades, certainly not the focus of what Alpha Trends is all about. So we've got to keep that in mind, that if you're looking for such a trade, it is not in the scope of what we do, but be aware of that potential scenario if those time frames are of interest to you. The Nasdaq was down 42 cents. It's still kind of hovering right around that 5-day moving average, and this volume weighted average price from the recent low is what we've had our eye on, as it has been support before. So I think that tomorrow we want to see this market hold about 185-ish, and on this daily time frame, as I mentioned, as the market was heading up towards this level, that people will start to call this a double top, and we will only know if, in fact, it is a double top once it breaks below this level. The true definition of a double top is it runs up to point A, pulls back to point B, point C, and then it breaks a trend line, and then once it breaks below that point B here, the low of that, and stays below it, then you have your double top. And the height of the pattern, which in this case is 6 points, would then be subtracted from 181, giving a downward objective of 175. Now, I'm not calling for that to happen. I'm merely pointing out how a true double top comes about to be formed, because we have zero evidence that it is one. Just as people were, calling this a double top over here, or calling this a double top. The point is, a double top is one of the most misdiagnosed tops in an uptrend. It's simply an area that the market runs up to. So we will, see if it holds 185 first. If it holds 185, then we don't have to worry about a deeper pullback. But for now, 185 is going to be our key level to focus on for tomorrow. The semiconductors ran up right kind of exactly the way that you expect it to. Is that this prior band of resistance, the market ran up through there, was extended, caught the the breakout buyers, who are always going to get, not always, but who generally are going to get what they deserve, which is to get stuck for chasing and taking on too much risk. There are sellers waiting there. This is one of the concepts I remind you guys about almost every single video, about not chasing, and here's what happens. And that's what deserves to happen to people who don't have the proper knowledge of how the market actually operates. Missed opportunities are better than lost money. Sometimes these breakouts work, but typically when they're extended like that, they don't, especially when we're in a bigger range. The biotechs are the perfect example of that, and this is what exactly what we spoke about, and that it had the potential of a breakout over here. It did break out. It trapped those so-called breakout people, and then they got what they deserve as we've pulled back 2 days in a row. Always ask yourself, where has the market come from? 116 to 122 and a half, 123. Well, that's too far extended to expect that you can continue to see significant gains from there. We've got this market This is a scenario I said maybe is going to happen, in the midday video. Right now, I think we've got to keep our eye on the volume weighted average price from this low. That's exactly where we pulled back to today. So we'd like to see some stability in here. And I hadn't looked yet, but this is also a 38.2% retracement of the most recent rally. So, we've got reason to think that this level will be important in the biotechs. The financials, we're down a penny today. Again, similar to the Russell 2000, you can look at this market and say, you can look at the Russell 2000 and say it's down too much, but down too much doesn't mean that it's time to buy. It's still below a declining 5-day moving average. It's still guilty till proven innocent. If we get a rally up towards this prior support where we have the year-to-date VWAP and the 200-day moving average, my bet would be, we're not here to bet, we're here to take calculated risk. But most likely, I think it would fail in that area. So again, we've got reasons for concern about this broader market with the continued weakness in the financials and the Russell 2000. So far, it's not spilling over to the Nasdaq and the S&P, but we have to be vigilant that that's a possibility.